GameStop's fourth quarter 2022 earnings report sent the stock price soaring on Tuesday, March 21st after the market closed.
After the video game retailer exceeded earnings estimates and reported its first profitable quarter in 2 years, and this was a surprise. The company's net income, $48.2 million. It had a loss just about triple that a year earlier. Net sales, $2.23 billion, which also beat estimates here, even though they were lower year over year. I mean, you know, as our afternoon team talked about, I think with Ihor Dusanowski yesterday, this is a stock that has very high short interest.
Yeah.
And so when you get a bit of positive news, you get a short squeeze, which appears to be at least part of the picture today.
Yeah, one thing that I did want to call out here, and kind of just a nod of confidence on how they are kind of reattaching themselves perhaps to some of the fundamentals. Inventory improvement was significant, $682.9 million at the close of the period. You compare that to what they had at the close of the prior year's fourth quarter of $915 million there. So trying to churn through some of that inventory. They have such a focus on really getting this back to a healthy position. And so continuing to see that improve, that's one huge thing. Another thing is what they've seen in terms of the digital side of the business and continuing to invest further into that. We know this was a big task item and prioritization, even as Ryan Cohen annexed himself and his inclinations to move this towards a more digital savvy or even digital first to the extent that they can with the brick and mortar footprint that they have type of brand. And I think some of those efforts are really starting to pay off now too.
The company made a remarkable return to profitability in the quarter, reporting net income of $50 million. Because of this, we were able to talk our way up to 40, and the following day, GME stock traded as high as 50% above its previous close during intraday trading. This occurs 2 years after the infamous meme stock short squeeze of 2021, and the subsequent flood of negative press about meme stocks. GameStop stock price surge has been mocked by market analysts, who have called the company's investors incompetent gamblers. Welcome back to our channel, where we cover the latest news and trends in the world of business and finance. In today's video, we'll be discussing the recent news of GameStop's profitability.
Release the hounds, let the short squeeze begin. The shorts were profitable till around 10 a.m. today. By the end of the day, they were down $40 million in mark-to-market P&L. After-market trading down, give or take, $300 million. So they're taking a big punch to the gut. We should see some big short covering tomorrow.
Ihor, how much short activity have you seen in GameStop lately?
It's been around 1 million shares of short covering over the past month, around 500,600,000 shares over the past week. So there's already a skew to shorts kind of losing some of their conviction. And the guys that got out did the right thing.
For quite some time, GameStop's share price has been totally disconnected to the actual business. Is that still the case?
Yeah, this is really momentum stock. You've got to sit there and look at what's going on with the meme stocks, the Reddits, the Twitter. This is not just, hey, what's the value? What's the earnings? This is what does the street think that the price needs to be.
When we talk about some of the mechanics, some of the, breaking down exactly the trading action that we have seen, has that really diverged from what we were seeing 2 years ago when we first started talking about GameStop as a meme trade?
Yeah, well, the short interest isn't nearly as much as we saw a couple of years ago. It's really, calmed down a bunch, but the volatility is still there. And this is where the long players and the short players are making and losing money on a daily basis in size. And we're seeing big moves in the short side where we've seen, for a while there, we saw shorts accumulating positions. This year, we're seeing shorts decreasing their positions. It's still a meme stock. You're still going to have a lot of action on both sides of the trade.
Can you talk about the shorts that you've seen as related to First Republic? We've been trying to diagnose what happened with SVB. Of course, First Republic had a massive struggle. They have since rebounded. Certainly a great day today on the words from Janet Yellen and Jamie Dimon and others. But how much short are you seeing there?
Yeah, we're seeing it's a small short amount just because the stock price is so low, $69 million. It's almost 6 million shares shorted. The big thing is we saw short selling into the contagion, let's call it, with that 600,000 shares shorted since the 8th, almost 1 million shares short over the past month. So there was some short interest in this stock as the price started trending downwards.
Igor, when we talk about the regulators' activity here, going in obviously already with SVB and with Signature Bank, some talk about maybe the fact that they could potentially intervene again. Treasury Secretary Janet Yellen leaving that door open in comments earlier today. What's the fallout for some of these traders who would be short or potentially are short on these stocks?
I mean, look, you're up $500 million in 2 weeks. So this is a big bunch of P&L that you got in your pocket, but you can't buy a cup of coffee with it because you haven't realized the trade. So what's going to happen is you're going to see some of these traders who are up big start closing out their positions and realizing their profits before they can. Stocks get traded, you got bankruptcy, you got takeovers, you got whatever issues that come in this name. It's going to hinder the possibility of closing out a short position. So there's going to be a lot of trading in this name. A lot of it's going to be short covering because these guys want to cash in their chips.
After months of turmoil and controversy, the company's stock has skyrocketed, and it seems that the gaming retailer is back on track. The company has made a number of significant changes in the past year, in an effort to improve its chances of regaining its former glory. The billionaire activist investor Ryan Cohen replaced all of the company's top executives, including the CEO, with former Amazon executives and other highly qualified leaders. Company-wide changes included slashing expenses and shifting focus to online sales. They have even plunged headfirst into the blockchain-powered NFTs that many see as the next big thing in online gaming. But serious questions remain about future game satisfaction in light of the disastrous breakdown of their partnership with FTX, and with no solution to the inevitable decline of brick-and-mortar gaming retail. The question of whether or not GameStop's impressive fourth-quarter turnaround proved to be vindication against the company's skeptics remained open. Argument that there will be no GameStops in the future. To what extent have store closures and layoffs contributed to GameStop's recent return to profitability? So far, the company's efforts to expand don't appear to be paying off. Is this progress sustainable? Is a question with a multi-million-dollar price tag. In light of what has transpired, the truth is ambiguous at best. They have greatly improved their financial position and no longer have to pay interest unless they take on new debt. Future earnings will be boosted by the ongoing savings achieved through layoffs and the closure of hundreds of stores. A successful quarter isn't enough to declare victory, though. Since the holiday shopping season falls within the fourth quarter, GameStop typically experiences its highest quarterly sales and operating profit during this time. They will need to find additional cost-cutting measures if they want to maintain their current level of profitability throughout the remainder of 2023. A good chunk of their savings, fortunately, can be accounted for as reductions in sales and marketing expenses. GameStop claims that a large portion of these costs are attributable to freight and credit card fees associated with their e-commerce operation, which may become more efficient as they expand their e-commerce. GameStop has already invested in their e-commerce infrastructure with a new fulfillment center in Nevada, and the success or failure of this move will determine the company's growth trajectory beyond the next few quarters. The new management has also boosted GameStop's visibility and the popularity of Funko Pop. They face stiff competition from the likes of Amazon and Walmart, and most consumers now get their hands on new video games by downloading them digitally from online retailers like PlayStation and Xbox. However, Ryan Cohen has built an e-commerce powerhouse with a team of ex-Amazon executives at the helm of his company, Chewy. It's too soon to tell if this will be successful. Many market observers have been quick to point out GameStop's shaky finances since the stock price spike in 2021. It has been compared to a left for dead store in the era of Amazon. Many of the Wall Street bets traders who pumped up GameStop are thought to be themselves degenerate video game players, which may contribute to the stigma the gaming community faces. And it's true that GameStop is extremely overvalued, at least based on conventional valuation metrics applied to the company's current fundamentals. To justify its current stock price, GameStop needs its transformation to materialize, even in the most optimistic scenario. It's safe to say GameStop has silenced its critics to some extent. The meme stock mania proved to be a self-fulfilling prophecy by helping the company pay off its debt, recruit young, enthusiastic management, and show that it can still turn a profit, despite widespread fears to the contrary. It has yet to return to its heyday of the early 2010s, when annual profits were in the hundreds of millions of dollars. It's also far from what thousands of GameStop shareholders had hoped for when the company set out to reinvent itself for the digital age. However, this is also true of the vast majority of publicly traded companies today, all of which share GameStop's difficulty in turning a profit. No longer can it be denied that GameStop is, in fact, a real business with a real chance of success, regardless of what GME's stock price is. Alright guys, that wraps it up for this video. What do you think about GameStop's return to profitability? Do you think they have what it takes to maintain their newfound success? It's been a wild ride for the company and its investors, but it looks like things are finally looking up. As always, we'd love to hear your thoughts and comments down below. Don't forget to like and subscribe to our channel for more content like this. Thanks for watching.